Ladies and gentlemen, good day and welcome to the Agarwal Industries Corporation Limited Q4 FY22 and FY22 conference call hosted by HIM Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. To remove yourself from the queue, please enter star and 2. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asta Jain. Thank you, and over to you, ma'am.
Thank you. Good afternoon, ladies and gentlemen. Thank you for joining the Agarwal Industries Corporation Limited Q4 FY22 and FY22 earnings conference call. Joining us on the call today are the management team, and Mr. Vipin Agarwal, Chief Financial Officer, is there from the management team. We will commence the call with the opening thoughts from the management team, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you may have. At this point, I would like to add that some of the statements made or discussed in the conference call may be forward-looking in nature. The actual results may vary from these forward-looking statements. I would now like to hand over the call to Mr. Vipin Agarwal to commence by sharing his thoughts on the performance and strategic progress made by the company. Thank you, and over to you, sir.
Thank you very much. Good afternoon and a very welcome to everyone who has joined us today. I take the pleasure of welcoming you all to the Q4 FY22 and FY22 earnings conference call of Agarwal Industries Corporation Limited. Let me start by giving you a brief overview of the company's business and will then take you through the financials. We'll then be happy to take questions you have, if any. Agarwal Industries Corporation is an integrated ancillary infra company focused on a wide range of innovative bitumen products backed by our world-class logistics infrastructure, which comprises of 5 large marine vessels having a total capacity of 29,500 metric ton. However, the company has recently added 1 more vessel, and with this addition we own a fleet of 6 large vessels having a total capacity of 38,000 metric ton, which will be used in importing raw material from oil-producing countries. The company has a fleet size of more than 650 LPG tankers and bitumen tankers, 7 bulk storage terminal facilities with a total capacity of 30,000 metric ton, having direct access to the shipping networks located at Hazira Port, Mumbai Port, Dighi Port, Haldia Port, Mangalore Port, Karwar Port, and Vadodara. And we have recently started Chennai as well. We along with our subsidiaries have 6 manufacturing facilities located at Vadodara, Taloja, Belgaum, Hyderabad, Guwahati, and Kochi. Kochi is a subsidiary of Agarwal Industries Corporation Limited. Moving on to the results reported, starting with consolidated quarter highlights of Q4 FY22. The company has seen a growth in revenue of 44% in Q4 FY22 at rupees 652.91 crores compared to rupees 453.61 crores in Q4 FY21. Company reported an EBITDA of rupees 37.5 crores in Q4 FY22, a growth of 6% versus rupees 35.47 crores in Q4 FY21. Company reported a PAT of 23.73 crores in Q4 FY22 versus 23.71 Q4 FY21. Consolidated financial highlights for the full year. The company reported a 77% rise in the total revenue of rupees 1,601.99 crores in FY22 as compared to rupees 905.50 crores in FY21. The company has reported a EBITDA of rupees 109.51 crores in FY22 versus rupees 72.91 crores in FY21, which has grown by 50%. On a year-on-year basis, the company's FY22 PAT surged by 57% from rupees 40.53 crores in FY22 to rupees 63.68 crores in FY22. Further, I would like to add that the demand trend continues to be favorable across the infrastructure industries, which is quite exciting for us as the government is been focusing tremendously on the infrastructure activities. Our customer understands and appreciates the company's execution abilities, which constantly result in financial growth in market share. We continue to demonstrate profitable performance in long term to the relentless focus on leveraging our 2 decades of experience in bitumen and logistics. That concludes my opening remark, and I would now request the moderator to open the forum for questions from the participants. Thank you so much.
Thank you very much. We will begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Sir, can you give us the figure of volumes for the year or for this particular quarter?
Yeah, you want to get the volumes of the particular quarter or the entire year, please?
The quarter.
In the fourth quarter, we have last year we had done about 136,500 metric tons, and this year we have done close to 155,000 metric tons in the Q4.
Okay. And can you give us an idea of what are the comparable FY22 and FY21 volumes?
Yeah, in the year-on-year the entire year, we had done in the year 2021 about 325,000 metric tons. Against this, which we have done about 385,000 tons in the year FY22.
Okay. Okay.
So that's a growth of about 20%. 20% that we usually target. We have targeted a growth of about 20-25%, but this year the volume that we increased was about 20%.
Okay. Okay. Sir, so on the gross margin side, we have seen a drastic fall from around 24 to 14%. So how does the price profitability margin get determined? In the sense, I'm just trying to understand how should we try to actually, how do we try to price our products, and is it the gross margin that we look at preserving, or is it the absolute margin?
No, we look at both the margins, but as you are talking about the margins, if you see my standalone financials for the current year, the full year FY22, there has been an increase in the PAT. If you see,
Right.
It was about 2.6% last year. It is about 2.7%. And yes, on the consolidated basis, which you are, I think, referring to, it is due to the increase in the bunker prices. You are aware of the crude prices that has been very volatile since the war has started and the entire last year. Due to this increase in the crude prices, which ultimately contributes in a higher fuel prices, the bunker prices have increased, you can say almost 2.5 times to 3.3 times from the year we have started. Still we are able to manage with the good margins, only affecting about 10-12% of the margins. And since we are doing a larger volume and we are an integrated player, we have good volumes available to be transported in India. So we are able to manage all these things properly in that manner. Since we are an integrated player wherein we have vessels to transport our products in India.
Okay. And I was just looking at your number past year versus this year. There is a trend in terms of your margins of Q2 and Q3 being higher than generally Q1 and Q4. Is it the right understanding?
Q4 is the highest, if you understand. Q1 would be followed by Q4.
I am talking in terms of gross margin per ton or EBITDA per ton, if you wanted to take it that way.
Can you repeat the question once again, please?
In Q2 and Q3, generally are the margins per ton higher on the gross and EBITDA level?
You mean to say Q4, Q1 or Q2, Q3 you're saying?
Q2, Q3.
Q2 through Q is the low margins. Because see, if you're comparing the gross margin in these 2 quarters, since the volumes are limited because of the monsoons arriving into India, the volumes are just able to cater to the margins that we usually try to get. And when you increase the fixed cost, all the cost of running the company remains same in Q2, Q3, Q4, Q1. But Q2, Q3, the volumes are low, so your fixed expenses are being met properly. Whereas when you increase the volumes, the other whatever margins we incur in the other quarters, it all contributes to the bottom line.
Okay. So basically what you are saying is in Q2 and Q3, because the volumes are low, you try to take care of your fixed costs.
Yeah, especially the fixed costs has to be taken care, because if you don't take care of the fixed costs, then ultimately that quarter you will incur in losses.
Okay, got it. And generally, after meeting the fixed costs, what are the kind of margins you try to make?
Exactly what you see in the Q4.
Okay. I got the point.
Yeah, see, to put it other way, when the volumes are increasing, see, my rentals in the Q2, Q3, they remain the same irrespective of what volumes we do. So in Q4 and Q1, if we are doing, say, instead of 10,000 tons, we are doing 40,000 tons. So only the additional cost of throughput charges, say about, it's very hardly a negligible amount. Other cost is taken same in the Q1, Q2, Q3, it's all fixed cost, which is being incurred in all the quarters.
Okay. And any guidance for next year volumes, sir?
We have always targeted internally to keep our volumes minimum about 20 to 25%. So if we are able to do the volumes that we target, the top line will automatically grow as well as our PAT. And I think if you've seen last few years, we are able to maintain close to 22% of growth in terms of volume. We don't run after the top line, because if these prices of commodities are always volatile, it can be up, it can go down. But if you're able to increase your volumes, ultimately your top line should be always on the higher side. There will be an increase in the top line also.
Okay. And one last technical question. Since OMCs are choosing to make my understanding is going to the petcoke route instead of producing more bitumen. But in case the petcoke prices drop, is it the right understanding that maybe they might come back into the market to supply some extra bitumen into the market instead of that being imported?
The PSUs, no. The PSUs cannot produce more than 5.4 million tons in a year, even if they are not producing coke. If they produce coke, this production will go down anyways. So the maximum production capacity that the Indian refineries are having about between 5 to 5.5 million tons only. So any increase or additional requirement of bitumen, that will be purely imported bitumen only. In fact, we are supplying to HPCL, BPCL.
Okay, but why won't, are they now producing coke or not?
They are producing. See, all these refineries have their own integrated, tax systems and models, wherein if suppose in a particular day or a particular fortnight, a product is giving them higher margins, they will produce that product. So there is nothing called a pre-planned or a fixed plan for production of any product in refineries. If suppose fuel oil today, for them, fuel oil is a very highly marginal product today. So they are producing more of furnace oil or other oil products, if you say, base oil or all those lubricants and all these products. They are high margin products for them.
Okay. But in the case that margins on those products drops down, of this 5.5 million ton, how much do you think might actually come to the bitumen market?
Maximum 5.5 million that they can produce. That is the cap that they are having. Whereas the demand is about, say, 9 million tons today.
Okay. That's fine. Okay. Thank you, sir.
Thank you so much.
Thank you. The next question is from the line of Abhishek Sharda, individual investor. Please go ahead.
Hello. Thank you, sir, for giving me the opportunity, and congratulations for good set of numbers.
Thank you so much.
My first question is that what is our current market share in private bitumen industry? Like in last quarter, you mentioned that it was around 24 to 28%.
Yeah.
And previously it was around 18 to 20%. So at the end of
Q4 FY22, publicly listed data that is available from Jan to December. They publish it from Jan to December. If you see those numbers, if we had 4 lakh tons, the next importer or the next company who imports, it is about 60% of our volumes.
Okay.
If we had 4 lakh tons, they are about 250,000 tons. So that is the gap between the first and second.
Right.
So that publication house publishes data only from Jan to December.
Okay. So basically right now we are at around 25 to 28%.
We are trying to maintain the 20 between say 22 to 25 or about 28, 30%.
Okay.
Some months we go up, some months we can come down because of the monsoon.
Okay. And sir, expecting strong growth in infrastructure, are we looking into some expansion? Like any
As informed, we have already acquired the 6 vessels, and that would contribute say additional 9,000 tonnage capacity. So even if we are doing 15 voyages from that vessel, so we can add about 140,000 tons in a year.
Okay.
With our own integrated vessels that we will be having.
Okay. And sir, in this quarter, we have modified our segment, the name of the segment in our filings.
It is not actually modified. You cannot say it is modified because we were always into this. This sector was not available actually prior to say a few years back or 2 years back.
Okay.
Now this is a model when it has been all these companies who are helping the infrastructure growth. So all these companies are coming under the umbrella of ancillary infra.
Okay.
That is the only difference. So it's not a segment. So everything remains the same. The segment, because of the volumes or because of the great, contribution in making India so much of infra development across the country. So it is actually coming under the infrastructure actually because even logistics and bitumen supply that we make, it is all contributing to infrastructure.
Okay. Okay. So sir, what are the sustainable margins for this ancillary infra segment, which like basically contributes around 85 to 90% of your revenues? So what are sustainable operating margins for this segment over long term?
Sustainable margins, if you have to say, we have been sustaining on the margin that we have been giving across last almost 25 years now. So if our revenues and the margin that we have up 2.7%, which this year we have given, or if you have to give a range between 2.4 to 2.8% is a sustainable margin if we are doing volumes.
Okay.
And volumes are definitely going to grow because of the infrastructure development. So many new projects are already lined up. We already executed, some are under execution, and some are already in pipeline to be executed.
Okay.
All these new projects will contribute to additional volumes apart from what is already required. This volume may go up from 9 million to even 12 million in say next 2 years, 3 years.
Right.
And nowadays even governments are allowing to do works even during the monsoons.
Right.
After the this COVID period. People or the companies who have lost time due to COVID, they can take permission from respective government bodies and they can even do work when there is no monsoons. If that will prevail in the coming years, then I think even in the monsoon off season, we can do more volumes.
Right, sir. So thank you so much for your responses. I'll come back in the queue.
Thank you so much.
Thank you. The next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Sir, what would be the CapEx outlook next year?
Sorry, sir?
Capital expenditure plan for next year, FY22.
So if you have to say, we have, as we have declared, the 6 vessel is just taken over in the current, if you have to say, it is in the current financial year. So already we have done about capex about 50 crore rupees.
Okay, that is for the vessel.
Yeah.
Okay, and do you plan to do any
Additional about 10-15 crores. We keep on doing a capex depending upon the available opportunity that we get. If there is opportunity, yes, 10-15 crores is always on paper to be put for capex if there is a opportunity, good opportunity arises.
Okay, okay. And incrementally, sir, so what is the business segment we would like to focus on most? Is it the shipping logistics part, or is it the bitumen part? How should we?
Both are correlated and both are competing each other, and both are complementing each other. In fact, because if you have vessels, you will never dry in terms of availability of the product. If there is a problem in shipping business from some company, suppose you are dependent on a third party and he's under stress or there is some problem in his company, then you may not get the product on time. But whereas when as a player like us, integrated, who is having their own marine vessels to do the transportation of that product from the origin of the manufacturing to our different Indian ports, then you can never fall dry. We always have 10 to 15 days inventory, and with these vessels, we always have something in transit. Your volumes will never go dry.
Okay. I got that. And
it's a very important part. Both are very, very important part, because you cannot sell unless you have the product, or you cannot have the product without having the backup of selling the product.
Okay. And you're talking about sustainable margins of 2.4 to 2.8. What is that, sir, exactly? Is it PBT, PAT, or EBITDA? What are we talking about there?
PAT.
Okay. PAT margins of 2.4 to 2.8.
Yeah, because this is I say, if you see the year-on-year record, I think this was approximately in this range.
Okay, this is on a consolidated basis, is it? Or
talking about the individual, I only have informed about the individual basis. But yes, if tomorrow this war between Russia and Ukraine again comes down and the crude prices again fall to about 60-50, then our shipping margins will again go up, because the ultimate effect will come into the bunker price.
Okay. So if the prices fall, you are saying the margins will go up?
Yeah, if the war is put off, yes, because ultimately the crude will come down. The crude prices of crude will come down, which has a direct effect for bunkering, especially. Not the bitumen, but yes, bunkering, yes.
Okay, you are talking about the logistics cost part of it.
Logistics, shipping, chartering business, yeah.
Okay, there you are saying the margins will go up.
Yes, definitely, because if we are able to sustain good margins in the current year, where it is at almost all-time high bunker prices, and if you are able to give good margins even in the current year, going forward it cannot go above this unless there is a more severe war or something like that situation happens.
Okay, but even your chartering rates will go down then, right, sir?
No. In our business, the chartering rates are more or less stable. Yes, if you're talking about containers, their prices have gone up. But in this bulk transportation logistics, the prices have remained almost in a particular range. It has not gone beyond. The entire bunkering cost escalation has not been incorporated in the freight prices.
Okay.
Because if you incorporate the entire cost of bunkering, then it may not be feasible for us to import the product in India and sell.
Okay. But are you saying the chartering prices will not go down? Is it because of the demand and supply of the vessels then?
Yes, definitely. It has remained the same even after the increase in the bunker prices. But there is no question of going it out here. Yes, a range, if you say $2-3 against a drop of about say 500 to 700 USD per metric ton in terms of bunkering, it is hardly contributing anything.
Okay. I got that. Okay. Fine, sir. Thank you.
Thank you so much.
Thank you. The next question is from the line of Navdeep Singh as an investor. Please go ahead.
Yeah. Hi, all. This is Navdeep Singh. I really congratulate you for the good set of numbers.
Thank you so much. Your voice is very slow. Can you be a little louder, sir, please?
Okay. I congratulate on good set of numbers. So the only question I was having is from the two questions I have. One is from the margin front. If suppose these crude prices are going higher, okay, so can't we pass it on to the customers because we are the largest supplier of bitumen? So there should be a mechanism where we should be able to pass certain costs to them.
Okay. Any other point, or shall I answer this question first?
Yeah, please.
See, all these bitumen, all the product that we supply in India, it is all the prices are all determined by the PSUs. If every fortnight the PSU changes their prices, so it cannot. You have to have a particular difference between the local prices and a product that we usually import or manufacture from different factories of ours. If there is no difference between the product that we produce and the refineries, then you cannot be selling that much of volumes.
Okay, I got your point. So here we are just depending upon the volumes. Suppose we are going to increase the volumes, and so finally our bottom line.
I am not able to hear the last sentence, sir, please.
Okay, so it is volume like we. So are we confident that this kind of growth we would be able to sustain in future as well?
Yes. The volumes, because our basic understanding or the aim is to increase the volumes, and seeing the government focus on the infrastructure, there is no question or there is no doubt in our mind that the volumes will not go up.
And the second thing is like in the other expenses also increased, correct? So can you elaborate on that?
Other expenses for volume growth, I don't think so, because all the rentals, the terminal lease rentals that we have, they will remain the same even if you are doing 2 lakh tons or 10 lakh tons. There is only a small component, throughput charges, that would be incurred, which is compared only 20% on a comparable basis of the rental charges that we pay.
Okay.
All the other fixed costs will remain the same.
Okay. So what is this? What comprises of these other expenses?
Sorry?
Other expenses. Okay, if I compare it from last quarter, it's fine.
I think you'll have to refer to the balance sheet, because if I put any numbers, it may go wrong somewhere.
No, that's fine.
So I think you can refer to the balance sheet. Yes, about fixed expenses, rentals, we are having about close to 1.2 crore rupees. So that is the rentals.
Oh, yeah, that's fine. Thank you.
Yeah.
Thank you. The next question is from the line of Dr. Vijay Mishra from Omkara Capital. Please go ahead.
Hello.
Good afternoon. Good evening.
Sir, first of all, congratulations for a very stellar number.
Thank you so much, Sirji.
And my one first question is that in your balance sheet, your share capital weight.
Can you repeat again, please, sir?
In your balance sheet, your equity capital is increased.
Yes.
From 10 to 13. So exactly how it has happened and when it happened?
There was a few preferential shares that we had allotted last year, which were about 17,62,000 shares are fully converted this year.
Okay. Due to that is increased. Okay.
Plus the 25%, another tranche that were being the first tranche of 25% against another preferential share of 17,49,000 shares.
That is issued in which period, sir?
This is within the last FY22.
FY22. Particular month, sir?
The preferential share was issued in the month of April.
Last year, sir.
FY21.
21. Last year. second question is, sir, I believe, sir, you have planned to increase your capacity up to 10 lakh metric tons, sir?
See, it is not increasing the capacity because we already have capacity to do that much of tonnage. There is additional few, maybe 10% additional requirement in the terms of storage facility that we already have. But with the same set of facilities that we have today, we can reach 10 lakh tons.
10 lakh tons you can reach, and you have planned for that, sir?
Yes, but of course we have already close to one of the Mumbai refineries production capacity in FY22. So we are already close to what they produce in one of their refineries in Mumbai. Hopefully we may overtake the production capacity that one of the PSUs have in Mumbai.
Okay, sir. Third one, sir, I believe, sir, you get vitamin from two sources, one from Middle East and other from the PSU, sir.
Can you just repeat again, please, sir?
You get vitamin from two sources, one you import and other you get from PSU, sir.
PSU volumes are very low.
Sir.
Major volumes are contributed by importing the product for our different manufacturing plants.
Okay, sir. So, in future, PSUs will be totally converting that vitamin into the coke, sir, I think, sir.
See, they have already done most of the modifications, but as I have informed a few minutes back, it is all margins that they get on a particular product on which they take a call of producing a particular product. If yes, coke, if the margins are high, they will produce coke. If the margins are high on fuel oil, they will produce fuel oil or other products that they have in under their umbrella.
Okay, sir.
So bitumen, I think, this is the last product that they produce because that is the least marginal product for them.
Okay, and in our factory, that vitamin get upgraded for you, sir.
Yeah, we manufacture different products of bitumen, no? Emulsion, CRMB.
Okay, sir. Okay, fine, sir. Thank you very much, sir.
Thank you so much, sir.
Thank you. The next question is from the line of Mohit Savalia, individual investor. Please go ahead.
Hello.
So sorry to interrupt you, Mr. Savalia. We are not able to hear your audio clearly.
Hello. Now, is it clear?
Yeah, please go ahead.
Yeah. So thank you for giving me the opportunity. Now I would like to ask one question on capex front. How you are planning for this capex? Is it by way of internal accrual or you are planning to take any debt?
The current vessel that we have acquired is all being done from the internal accruals that were there with the overseas company.
Okay. Fine, sir. Thank you. And second question is that I just would like to understand the business front, like lower crude oil prices is helpful for the logistic business, but it is adversely affect to the bitumen business. Is it, sir?
It's not. You cannot say low crude price, but any volatile prices of any product that is not beneficial in a long-term business. Even if you say today our daily uses product that we use is dal and all those products. So any major volatile in terms of their prices is not good for any major economy or for any business. Yes, if the rate of crude say it remains between 50, 55, 60, 70, which was the case in last 2 years before this war, it was ranging between 50 to 70. So that range and volatility is understandable, and you can do good business because there is no dilemma of any product prices crashing or going up significantly.
Okay.
Any volatile prices is bad for any economy or for any company or for any sector.
Right, sir.
Today, if you see our share market, it is going down, 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 down. It has gone up, now it is going down, down, down. It's very volatile. You know how much wealth has been evaluated from the investors.
Understood, sir. Sir, the last question. Like you are planning to add one vessel, so I believe that will help to save the cost.
Yeah, we already added, sir.
Okay. And up to what level I can expect operating profit margin to go up?
Oh, it's difficult because
Any range, sir?
maybe about
10%?
2% to 4% from now, if you have to say, because of the bunker prices. If you have to say, with this additional vessel, we may be able to increase our margins for another 10-12%.
Addition of 10-12% from
Yes.
the current level.
Yes.
Okay. Okay, fine, sir. Okay. Thank you so much.
Thank you so much.
Thank you. The next question is from the line of Mudit Jain, individual investor. Please go ahead.
Hello, sir. Thank you for giving me the opportunity. Sir, what are the current debt levels, and are we expecting to become debt-free in near future?
See, the company is not having any major term loans on its balance sheet. Whatever we have is the working capital, and going forward, if we can go debt-free by, say, 24.
Okay, sir. Okay. And so my second question is, can you give the updates regarding
One more addition is there to the sentence. If we don't do major capex or any more further expansion, so we can definitely go debt-free.
Okay, sir. Okay. So my second question is, can you please provide the updates regarding capacity expansion at Guwahati and Taloja plant?
Taloja, we are already informed earlier also. We have already installed and successfully started the Taloja additional facility, that about 4,000 tons that we had added. That is already operational from the last quarter.
Okay, sir. Okay.
Guwahati is also ready when we have starting doing some small sales from Guwahati.
Okay. And sir, you have given the volume guidance for FY23. So can you please also provide the revenue guidance for FY23?
Volumes all depends upon the top, figures will all depend upon how the volatile product prices of the product is. But if you volumes, definitely we are always trying to maintain between 20 to 25%, which going forward our aim is to increase the volume by 20 to 25%.
Okay, sir. Okay.
Even if the current prices will be at 20-25%, the revenues will definitely grow.
Okay, sir. Okay. And sir, my last question is, can you please provide the average capacity utilization in FY22?
I think we have done close to 100% capital utilization of the storage capacity that we have.
Okay, sir. Okay. Thank you, sir. That's all from my side.
Thank you so much.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Sir, did I hear it right that after this deployment of this new vessel, we will see a bump up in margins by 10%?
Yes. So in the chartering side, yes. Logistics and chartering.
In the chart. Okay, only in the chartering.
Here the margins will remain same, because here the volumes or the margins are more or less in a particular range.
Okay, I got that. And secondly, you were saying that the prices of bitumen at which you have to, sell it to the customers, depends on the level at which PSUs price them, is it?
Yeah, all the discounts or pricing that we offer to any customer, the benchmark is the PSU prices.
Okay. And
changes every fortnight.
And any idea, sir, how PSUs actually benchmark those prices according to? Is there any particular?
In this industry, we are aware, but if I have to answer that question, it's very difficult to answer that question, because it's all the internal policies of the PSUs.
Oh.
So we are in this industry for so long, we know how the formula works, but we cannot be saying it, because it's an integral part of their policy. The PSU's policy.
Okay. Thanks.
Thank you so much.
The next question is from the line of Rinkle Vera from Mehta Equities. Please go ahead.
Good evening, everyone. Thank you for giving me chance for asking questions. When I see we are the largest private player in bitumen manufacturing and transportation and other few storage and LPG transformation and renewable energy. So can you provide me the revenue bifurcation from all of this? Like how much percentage from when we manufacture and how much percentage of revenue comes from transporting the bitumen?
If you see my the segment results that we have published, it's already there in that numbers are already published in those in the result that we have declared.
Okay.
I guess you can refer to the results, or you want me to give the bifurcation?
Yeah, I'll refer it. Okay.
Yeah, see, segment-wise revenue, if you say ancillary infra, bitumen and light products, here the total full year it was about, I'm just rounding off to the nearest zero, 1344 crores.
Okay.
Shipping and operating contributed to about 130 crores. Other petroleum products, 58.50. Logistics, 66.67 crores. Windmill, 1.25. And other revenues about 8.5 crores.
Okay. Yeah, thank you.
Thank you so much.
Thank you. Ladies and gentlemen, due to time limitation, that was the last question for today. I now hand the conference over to Ms. Asta Jain for closing comments.
Thank you. On behalf of Hem Securities Limited, I thank Agarwal Industries Corporation Limited team for giving the time we spent on this call and responding all the queries in the detailed way. I would also like to thank all the participants for joining this call. I would like to hand over the call to the moderator.
Thank you. Ladies and gentlemen, on behalf of Hem Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you so much for all the people who have raised their questions, and I hope we have successfully answered all the queries. Thank you.
Thank you.